this month, blockchain-based firm Ondo Finance announced the launch of Ondo Global Markets, a platform for tokenized U.S. stocks and ETFs. And they say in just 1 week, it became the largest tokenized securities platform with $127 million in asset volume. Joining me now to tell us more is Ian DeBode. He is the Chief Strategy Officer at Ondo Finance. Ian, welcome to the show.
Thanks for having me. It's a pleasure.
All right, so Ondo Global Markets, can you break it down for us? And for someone who is new to the crypto space, what service is it providing?
Yes, so Ondo Global Markets is a platform that tokenizes stocks and ETFs on the Ethereum blockchain. So think of it almost as what stablecoins did for $1. You put a token on a blockchain so that it's available to everyone globally. We just did the same thing for 100 different stocks and ETFs. The benefit of doing something like that is that similar to a stablecoin, once you tokenize a stock or an ETF, it can move around 24/7, it's globally accessible, and you can actually start to use it in DeFi.
And why do you think it got so big in just 1 week?
Yeah, I mean, we are very pleasantly surprised with the traction to date. We have a track record of tokenizing assets. We started doing that in tokenized treasuries. Now we've expanded to stocks and ETFs. And even in the tokenized treasury space, we've always been a leader in that category. So I think the Ondo brand right now kind of presents some trust to investors. The additional point to say is that the Ondo Global Markets platform is the first time that we've been able to tokenize stocks and ETFs in a way that anyone globally can access them permissionlessly, so move them around 24/7, send them to anyone you want, with the deep levels of liquidity and at the right price, just the same price that you can access it in a brokerage account. So both the fact that these assets are permissionless, meaning that you can freely move them around and that you can buy them at the right price with deep liquidity, I think is attracting some serious institutional investments.
And I love the way you're breaking things down and explaining them, because some of our viewers are new to the crypto space, and there's so many terms out there like blockchain, crypto, Bitcoin. Can you give us like a quick, just easy to understand explainer of how all of those things are connected?
Yes, so when you tokenize an asset, what it really just means is that you acquire the underlying, so if it's tokenized Tesla, you make sure that you can buy Tesla, put it in a brokerage account, and then mint a token on a blockchain that represents the economic exposure of that Tesla stock. That Tesla stock that's sitting in a brokerage account does not move. You want to make sure that it stays there so you always have it available in case someone wants to redeem. But that token that you issued on a blockchain can freely move around 24/7 and anyone who has a crypto wallet can essentially hold it. It's very similar to a stable coin where essentially you just put cash in a bank account, mint a token against that on a blockchain, and then it can freely move around. Anyone can hold it on a crypto exchange or in a crypto wallet. We essentially just did the same thing, but for stocks and ETFs where the underlying assets are sitting in a brokerage account.
And tokenized treasuries are already a $6.8 billion market. Are tokenized stocks and ETFs the next frontier?
We would like to believe it is. Typically, it's very hard to predict which assets actually get adoption, but when you think about the latent demand globally that is out there for these assets, I think it is pretty significant and a lot of people underestimate it. Right now, when you look at stable coins, we're already coming up on almost $300 billion, in large part because hundreds of millions of people globally have figured out that the stable coin is a very easy way to get access to the US dollar, and by putting it on blockchain rails, it actually becomes better than if it's just in a bank account because you can freely send it around 24/7. The same thing has started to happen with tokenized treasuries. It went from $1 billion or so 18 months ago to now $7 billion. And we expect the same thing to start to occur for stocks and ETFs. There are about 400 million people outside the US that have a crypto exchange account, but most likely do not have a brokerage account because access to brokerage accounts historically has been a lot more difficult to get. So we believe you'll start to see crypto exchanges and crypto wallets start to list stocks in tokenized form, really opening up access to that global audience that historically has not had that.
All right, and Bitcoin and Ether this year hit all-time highs. What are your thoughts on that?
I mean, it's a confluence of factors, really. It's the perfect storm. There was a lot of pent-up demand. I think we saw that when the ETFs launched, even under the previous admin. this particular administration has started to provide some more regulatory clarity, and there's were a lot of institutions that were really waiting for that to happen. So I think it's just pent-up demand from the past years that has accumulated and that now really start to reflect itself in market prices. I think at this point it's safe to say that crypto as an asset class is not going to go away. Even 4 years ago when I would speak to institutions, that was still the question, like, is this stuff going to stick around? People right now understand it's not going away, and as a result feel more and more comfortable allocating a certain percentage of their portfolio to the asset class.
Yeah, and we've had some recent IPOs here, Circle, bullish, so crypto really is entering, the world stage.
Oh, for sure.
Yeah.
And I think you start to see, because most of these IPOs has done pretty well, right? I think there's a real retail demand for these assets. People want to get exposure to the category that isn't just Bitcoin and ETF, and these companies represent that.
All right, Ian DeVoe, Chief Strategy Officer at Ondo Finance. Thank you so much for joining us at the New York Stock Exchange.
Thank you for having me.